Hello, crowdfunders. Are you tired of low risk, low income on banking deposits? And you ready to try to take higher risk for higher returns? Crowdlending could be an answer. When you keep funds in deposits, banks use your money to lend it to people and businesses for a higher rate than they pay you for deposits. And this is how banks make profits. Crowdlending allows you to cut bank as a middleman and put yourself in a banker's shoes by lending your funds directly. So how does crowdlending works? Businesses post their offer to borrow funds on a crowdlending platform, describing their business, team, and how they will make money to return your funds, as well as details how funds will be rapid and what will be your gains. Users of the platform who believe in business each grant some amount until the total sum of granted funds reaches a set target. If the target amount is not reached, deal is terminated and funds are returned to investors. If the target amount is collected, the deal is concluded, the loan is granted, and the company uses them as defined in purpose. At some point, the company will start paying you back, and you will receive two types of payments. Interest, which is your gains from lending funds. Principal amount, which is part of the lent amount. Payments will be paid according to schedule, which usually is monthly interest and principal payment. But it could be quarterly, annually, or at the end of the loan. So pay attention. It is safer to start receiving interest and principal earlier. And of course, you will receive funds only if the business succeeds. If it fails, you might lose your funds in full. So how to choose crowdlending deals to not lose money? There is no one rule, and risk might be low, but never zero. But here are some essential things to remember and evaluate. Invest in industries that you understand. Banks would never invest if they do not understand risk, so why should you? There are two main types of loans, secured and unsecured. Unsecured means if the business falls, you are almost certainly will lose whole your investment. If the loan is secured, it means that loan repayment is guaranteed by some asset or obligation. For example, loan is secured with the building. If the company fails to pay the loan, the building will be sold, and gained funds used to repay. Note, gained funds from sale could not cover your whole loan, so you might lose some funds as well. Do not invest in headlines. Spend time and evaluate the project. Aren't they over-optimistic? Is there a market for the product and its growth? Will customers pay for the product? Does financial results are trustworthy and sufficient to repay your loan? We on Crowdinformed.com have several articles where industry experts describe how to evaluate crowdlending deals, so make sure you read them before investing. Remember, investing is always subject to risk, so invest wisely. And don't forget to rate and leave a platform review on the Crowdinformed platform list to help others choose the best platforms. We wish you a successful investing Crowdinformed.